let's go talk about Celsius Network, crypto lending firm that's also dissolving itself through the bankruptcy process. Now, bankruptcy proceedings, it's a big, old, long line of people looking to get some pennies back on their dollar. And some of those people are favored over other groups of people. And in this story by Ian Allison, we get an update on how Celsius customers are toward the back of that line. And that's sort of a reality of how these proceedings ultimately unfold. But this is happening against the backdrop of CEO Alex Mashinsky and other top executives pulling out something like $42 million from the platform itself before things really hit the fan. So this is another update on Celsius, which is in a bit of dire straits. I'm going to throw this to Christy, actually. Christy, what are your thoughts on the Celsius story? I think it, again, speaks to some of these, centralized parties that exist on top of these open blockchain networks. What are your thoughts?
Yeah, second verse, same as the first. We're getting a lot of these stories coming out about things that have, unfortunate leadership, perhaps unfortunate business models in the first place, and shout out to CoinDesk Christine Lee for calling it way early. I think we've known that there's been some odd shenanigans potentially going on at Celsius for a while, and I think that the behavior of the CEO in the last little while has been kind of bringing that to bear. We're seeing, taking money out, rearranging it so that the retail customers are at the back of the queue. I think that, that doesn't give anything a good look on the face of it. And is, again, as in the case of Terra, it's making everybody in crypto look bad. And the thing with Celsius is it does involve more than just their own token. It's a lending platform. It dealt with lots of different tokens and representing, gains in lots of different ways. And, people think that by putting their money into something like that, they're going to be making it big in crypto, and it really dashed a lot of hopes. So that's a big problem, just for media relations. Will?
Yeah, I want to compare this against the BlockFi Chapter 11, which we're seeing as well right now. And BlockFi is working with FTX and a few other counterparties to try to figure out who gets what in the event that there's going to be an auction of these assets. We've seen that SBF and FTX have publicly stated over and over again that they want these assets to go back in the hands of the correct people. I think it's a similar case with Voyager Digital, which is also looking at putting these assets back in the hands of people who had them on the platform originally. That's compared to this situation with Celsius, where you have these equity holders also involved. So you have two groups, right? You have the equity holders in Celsius that paid upfront with big checks. They get a slice of whatever revenue Celsius makes in the future through dividends possibly, and then they also get a chunk of the company in case it goes public. If it doesn't go public, you still have that private valuation. You can sell that on the secondary market to your friends and family if you want, or you can just keep it in your own pocket as an asset on your own books. That's a nice place to be, but it's not a great place to be if you go through Chapter 11. And so their desires for that money is now against all these customers who had assets parked on top of Celsius. If you had a Bitcoin or two parked on top of Celsius, you probably haven't gotten it back yet, and you've probably been waiting for this auction to occur. Well, guess what? There's two claims to that money, right? You want the equity holders to get it, and you also want the customers on the platform to get their money back. But there's not enough money. That's simply what it is, right? You can't have a valuation of $5 billion or whatever it was at some point, and then also have all these assets on the books. The money has to be split somewhere. And that's the unfortunate part of this Chapter 11 bankruptcies is oftentimes the people who have access to making these decisions and get the assets are the ones with power, and it's not going to be the customers in this case. Unless this goes through some protracted class action lawsuit, or there's somebody at the top like SBF who's willing to be a little bit altruistic, I don't see a way where Celsius customers end up on a very good side of this. That's just the nature of Chapter 11. I hope I'm wrong, but that's typically the nature of Chapter 11. It can be pretty tough if you were just lower down on the contract stack. Zach, I'll throw it back up to you.
I think that's a pretty fair summation of where that stands, and it's not going to be the last that we hear of Celsius and its disgruntled customers. That's just the nature of these things, be it Celsius, Kodak, or what have you.